Hello, everyone. Thank you so much for tuning in. This is the eve of Christmas Eve, and I have got a present for you, which is I'm going to walk you through how to fill out the Restaurant Revitalization Fund's their program's portal post-award report. Now, this is due by the 31st of December. So that's coming up in just about a week. And I'm guessing a lot of you haven't done it yet, which is understandable. They only sent this out in October. And it was really confusing because we know that the period for this award goes until March of 2023. So why would you have to submit a report by December 31st of 2021? And really all they're asking for is a progress report at this point. They're just saying, hey, we gave you all this money. Are you spending it in a way that's consistent with the way that we wanted you to spend it? And if so, we'd like you to tell us that. And if not, we'd like you to tell us that. And so if you haven't expended all the funds according to the rules so far, that's okay. You still have like a year and a half left to do that. The final report's not going to be due until sometime in 2023. They did a really good job structuring this program to make it that way. However, I would like to point out that the beginning date for the funds that you can use and the expenses that you can use to allocate these funds to was actually backdated to February 15th, 2020, even though this was a 2021 program. So I would guess that a lot of you out there actually have expended all of the funds accordingly if you look at all of your expenses from February 15th, 2020 through November 30th, 2021, you may already have taken care of all of it. So in giving them your progress report, you may find you've already used up all the funds, in which case you can let them know you've already used up all the funds and you don't have to do all this reporting again next year. So I'm going to walk you through how to take care of this. We do have a really good program, a spreadsheet that we've downloaded from the AICPA, the American Institute of Certified Public Accountants, but we've tweaked it in terms of how we're using it and how we recommend that you use it. So this is the tool that we're using. It's the AICPA.org's website, aicpa.org, and the link is /resources/download/track-eligible-for-the-RRF-with-this-tool. It's a good name. And if you go to that website, you'll see that it is a free account access. You do have to create an account with the AICPA, but there's no cost for it. This is the same organization that gave us the wonderful PPP forgiveness calculators. So I mean, I'm a member, but it's available to the public. They really have an amazing set of resources for us. So track eligible expenses for the RRF with this tool. If you go down here, you just click the download button, and that is going to download this spreadsheet for you. So once you've downloaded it, you'll see this is what it looks like, and you're going to start on the first tab, which is called Summary. And the first thing you're going to want to do is in A9 over here, you're going to want to type in your restaurant's name. And then everything else on this page is actually going to funnel onto this page from the expense tracker, which is the second tab here. So step 2 is that in C6 here, you're going to want to type in the amount of your Restaurant Revitalization Fund program grant. So that's step 2. Step 3, you want to go into QuickBooks or whatever program you're using, and you want to run a profit and loss for the period of February 15th, 2020, so right when the pandemic started, all the way through November 30th, 2021. Now, I know it might seem a bit odd to run a profit and loss over a calendar or fiscal year end. But you really aren't trying to come up with financial statements here. You're just trying to get a reporting of all the dollars you spent in these various areas. So step number 4 is to take that profit and loss and export it to Excel, which I have done over here. Okay, so this is what your profit and loss might look like. I added these highlights in later. That's later in our process. And then step 5, oh, and you want to save this into a folder called like RRF forgiveness or something like that, RRF reporting. Step 5 is that you actually want to go through and you're going to take amounts from this profit and loss, and we're going to enter those amounts onto the expense tracker tab of this AICPA tool. Okay? Now, the way that the AICPA expects us to use this tool is they're thinking this is for smaller organizations maybe that don't have QuickBooks or some sort of really good tracking method. And so they expect you to use the date of every single expense, the vendor or payee name, the invoice number, the payment info, the expense description, etc., for every single transaction. Now, we have all of that detail in QuickBooks already, right? We don't need to reinvent the wheel here. So our little trick here, our tip that we're recommending that clients use is to run that profit and loss for that period of time, the way that we just described, and then take the amounts from that profit and loss and enter them into this tool as summary items, okay? So for example, the expense categories that are allowed for the Restaurant Revitalization Fund, they're in this expense tracker in this little drop down right here, okay? All, I think 10 of them are listed here. So all you have to do is look at where those 10 areas of expenses, where are they tracked in your QuickBooks file? And then you can take the total summary of the entire period of time from February 15th, 2020 to November 30th. And I'm saying November 30th, 2021 because this is December 23rd today, right? You can't have your December books reconciled yet. So I'm just going through the most recently reconciled month. For most people at this point, that would be November 30th, 2021. So you take those numbers and what are all of your payroll costs? You would enter those in here. What are all of your rent or business mortgage costs? You would enter those in here, et cetera, and so on. Now, if you need to know what those 10 expense categories are, aside from the little drop down that's already conveniently in here, you can go to this expense categories tab on the AICPA spreadsheet, and it actually lists all of the expense categories right here, and it gives a little summary in column C of what those types of eligible expenses would be. Now, the Restaurant Revitalization Fund was written really, really well with a lot of help from the Independent Restaurant Coalition, and they looked at the problems with PPP, they looked at the problems with the EIDL and the SVOG and a lot of the other programs out there like the ERC, alphabet soup of small business financial relief. And they said, well, we want to avoid those problems. How can we do that? And one of the things they did is they made it really, really, really sort of all-encompassing. Anything that's a business operations expense, it's going to count for the RRF. So I think what's most important when you're looking at these expense categories is to look at which expenses are not eligible. Pay attention to column D, take a quick look. It's going to make it clear what things are not eligible. Everything else is eligible. You just have to figure out which bucket it fits in these expense categories. So those are the same expense categories that are listed in this little drop down right here in the expense category column in the AICPA's expense tracker tab. So what we did was we ran this report here, this profit and loss, and we said, okay, we know that cost of goods are covered supplier costs. That's one of the 10 areas, right? We know that food and beverage is one of the areas, so we took our meals and entertainment there. We know what the business payroll costs are, rent and mortgage. Business maintenance is repairs and maintenance for this particular client's chart of accounts. We have small tools and equipment, which for this client is their business supplies and materials. We have utilities, and everything else on here is business operating expenses. we purposefully excluded the other expenses section of our chart of accounts here. And the reason is that the way that we do it and what is standard in the industry is we don't put operating expenses in the other expenses section. That's usually held for non-operating expenses. So even though amortization and depreciation do qualify for RRF, we're just saying, hey, you know what? The easiest way to do this is to look at the expenses that we know are in operating expenses, regular business operating expenses. Let's use those. We know that those are going to count. And if we don't have enough at that point, then we can go look at things like debt service, construction of outdoor seating, depreciation and amortization. Those are things that they do qualify. They are eligible for the Restaurant Revitalization Fund. But if I don't have to go searching for those on the balance sheet, if I don't have to go searching for those in my non-operating expense section, then I won't. So we took each of those numbers and we put the whole amount for the year. We put the date in each of these cases as 11/30 because we're doing this from February 15th, 2020 to November 30th, 2021. And we're putting a little note here for vendor payee names so that we know what it's for. And we're putting the total amount and picking the different expense category for each one of them. So we did not use an expense category for business debt service, and we did not use an expense category for construction of outdoor seating because those are things that are on the balance sheet. They're not on the profit and loss. They're harder to figure out. And we had most of our clients are going to have plenty of expenses on the profit and loss, easy enough to find without having to go onto the balance sheet and look for these other things. So we put a summary of each of those in here, and you can see we've got those all the way here through overhead costs. So then the question is this, and this is the most important part to keep in mind, in my opinion. The key with the Restaurant Revitalization Fund is that it is very, 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 it's generous in what it allows one to claim as an expense that is eligible to be covered by Restaurant Revitalization Fund program, grant monies. But what they want to make sure they're not doing is having you double dip. We don't want any double dipping. And so we're going to make sure we subtract the grants that we received from these total expenses to make sure that you're not using both PPP funds and RRF or idle grant funds and RRF or any state or local grant or industry specific grants. So the way that we decided to handle that was that we said, okay, we know that for PPP1, we have for every single client, we have their forgiveness application that says how many of these dollars we used for payroll, how many of these dollars we used for utilities, how many we used for business rent or mortgage, and how many of the other grants we used for business operating expenses. And we went ahead and put them in here in the easiest way possible. We put our PPP1, we put for business payroll costs. PPP2, we put for rent or business mortgage. And all other grants that were non-PPP grants that were received, we put under business operating expenses. Now, do we have to be exact about each of those expense categories? No, because the key is simply that no dollar is being used twice. We're not using any dollar that we've spent to allocate to more than one grant. And as long as we're subtracting the entire amount of grants that we received against all of the other expenses that we have, then we're okay. We did allocate them a little bit between these different expense categories only so that, and here's the magic of this spreadsheet, when we go to the summary tab, you can see that it has summarized all of these things for us. And I just didn't want any ugly negative numbers to show up here. So I made sure that anything that was likely to have been a payroll cost, like PPP1, anything that was likely to be a business operating expense, like most of the grants that we had, I just wanted to make sure they lined up so that we didn't have any negative numbers on here. So in this particular client situation, as you can see, it's come over here, it's summarized everything. They received an RRF, we put the number in here, of 293,030.83, but they spent more than that on things that were qualified for RRF with no double dipping, because as you can see, for these other grants, we've entered those amounts as negatives, right? And so as a result, all of the numbers that are left here do qualify for RRF. So they more than spent their RRF funds on eligible expenses. And so this will be the only year that they have to do this reporting for. They can go ahead and report on this through the portal, and then they can make sure it's clear on that portal, in the portal, when they're doing the post-award report, they can make it clear that they spent everything and that this is the last year that they have to do reporting for. So once you've pulled all of this information together, again, I recommend that you're going to take care of your business payroll costs, your rent or mortgage, your utilities, food and beverage, repairs and maintenance, business supplies, covered supplier costs, and all other operations expenses, everything other than your non-operating expenses. And that you skip the debt service and skip the construction of outdoor seating, because those are things that are on the balance sheet. If it turns out that you need them, there's plenty of time between now and the final reporting in 2023 to go to their balance sheet and look those things up. But if you're just trying to get this report, this progress report, filed by the end of this year, and make sure that your numbers are accurate enough to show the SBA that you are complying with the rules of the program, then I think that you can, for now, you can skip debt service and construction of outdoor seating, and you don't need to include depreciation and amortization in your operations expense. Remember, this is just a progress report. In this particular client's case, they did really well on their progress report. They got an A+, and they're all done, and they're not going to have to file it again. But that won't necessarily be the case for everyone, and that's fine. You have, again, until March of 2023 to expend all of these funds. So when you go in and you do this reporting, it's interesting. The email that they send out, as you'll see in my blog post, the email says it only takes 5 minutes. Well, obviously what I just showed you how to do takes more than 5 minutes. Collating the information takes more than 5 minutes. It shouldn't take that long because, you've got your QuickBooks and it's pretty obvious that you're going to be declaring almost all of those numbers. It's just a question of which pot it goes into and making sure that you are subtracting any of the other grants you received so that there's no double dipping. That's the key part. Once you have all that information, though, it really does take only 5 minutes. It's quite easy. You're going to go to restaurants.sba.gov, just like it says in the email that you would have received. And you'll see there's a RRF program post-award report. And you're going to put these numbers in. They'll ask for your name, address, your employer identification number, your phone number, and your email. And then they're going to ask for these numbers. So I'm going to share my screen one more time. And these are the numbers that you're going to type in to that report. And then if you've used up all of your funds, you're going to let them know that. And then this is what it's going to look like. This is a different client, but you're going to indicate how much of your RRF funds you've spent in the following eligible categories. These are the same categories we were looking at before. And then you're going to certify that it's true and correct. And then it says that the first submission of the report is due no later than December 31st, 2021. And if you fully expend funds on or prior to your submission, on or before December 31st, you should certify in the portal that you used all funds in eligible categories and you do not need to file any additional reports. And if you don't fully expend them, which is also going to be the case for a lot of people, I suspect we'll have people in both camps, then all that means is you have to submit another progress report by December 31st of next year. And you'll do the same thing. It's just that you'll use the reporting period of 12/1/2021 through probably November 30th of 2022, right? And you'll do the same exact thing. Remember, debt service, which means loan payments, regular loan payments, not big lump sum payoffs of loans, but regular loan payments that are in the course of your business, and also building any outdoor patio space. Those count as well. Now, normally those are going to be on the balance sheet as a reduction of your loan balance, but that's just going to be the principal portion, and you want to make sure you're deducting both principal and interest. Interest is usually in the other expense or non-operating expense section of your profit and loss. So that can be a little bit tricky to figure out. And then, setting up an outdoor patio, that usually would be in your capitalized expenses, which is also on the balance sheet. So that's why I left those two off. They're a little bit harder to DIY. If you're going to use debt expense or you're going to use the capital expense of building an outdoor patio, it's probably best to reach out to your accountant. If that's me, reach out to me. But my guess is that if you're running a report from February 15th of 2020 all the way to November 30th of 2021, you probably have plenty of profit and loss, which are really, really easy to grab from the report, probably plenty of those to use. And if not, you probably will between December 1st, 2021 and November 30th, 2022, at which point you will submit that December 31st, 2022 report and certify that you fully expended your funds at that point. And if you really haven't done that yet, you do have through March 11th to expend the funds, and then the final report would be, so this would be March 11th, 2023, and your final report would be April 30th, 2023. So make sure you keep backup for all of these things. This is just your progress reports. You're just telling them what's going on. But at any point in time, you could be audited. And so it's important that you have, canceled checks and bank statements and invoices and contracts and all of the types of things you would expect to have to corroborate this, to support that you really spent these monies. But this is how to go about doing this before December 31st of this year. And these same rules should help you out for December 31st of next year if you haven't expended everything for this year. I'm going to go ahead and upload this to YouTube, and then I'm going to share this in a blog post, send it out to my own clients and anybody else out there who finds it useful. And if you have any frustrations or difficulties that you're finding on the SBA Restaurant Revitalization Fund portal, or if there's something wrong with the spreadsheet or you have questions like that, please post them in the comments of the blog. If you're a client of mine, please email me directly. But if you're not a client, post them in the comments on the blog and I'll see what I can do to help. Thanks so much and good luck with everything. Happy New Year.